for fourth block accounts from incomplete records. It's a simple topic and easy topic to remember and work out on it. So I'm taking up this. Good afternoon, all of you. In today's class, we are going to discuss about our fourth block. Uh, our fourth block. So, fourth block, accounts from incomplete records. We are going to do sums on this today's class. It's a simple and easy from. What are the accounts from incomplete records? Accounts from incomplete records is generally a topic where businessmen, those who don't maintain any of their accounting records based on the accounting principles, how do we keep their profits and assess their liabilities, assets, what we learn under this accounting from incomplete records. Okay. Generally, incomplete records means a book of accounts which are not kept and maintained as per the double entry system. Okay. They'll, the business people generally keep only personal account and cash related cash transactions record. The rest of the transactions, the expenses, and the incomes that they earn will not be maintained. Okay. So these accounts from incomplete records generally is the kind of here a businessman who don't want to keep maintain their how do they pay their tax and how their assets or liabilities or the business is valued is what we learn here under this. Okay, if you look into the meaning of the incomplete records, accounting records which are not strictly kept according to the double entry system are known as incomplete records. Okay, so we also can call them as a single entry system. Okay, so they don't maintain any records as per the double entry system. Coming to the features of incomplete records, you have it's an unsystematic method of recording the transaction. They maintain only personal account and cash transactions. That means they maintain the record of all personal account and cash transactions. And personal transactions of owners also they combine. Okay. And the next, different organizations, there is no systematic approach. Every organization has its own procedure, okay, and they record in their own methodology. Okay, so getting profit or loss of these organizations is based on the how do you calculate, how do they pay the tax, how the income tax charge the tax on these is based on the vouchers, bills, cash memos, whatever they maintain. Based on that information only, profit or loss of the firm will be valued. So this we cannot ascertain under this system exactly accurate value cannot be given. And why they don't maintain that records as per the double entry accounting system. Because first of all, the businessmen who are under the single entry sole trader form are having no knowledge of accounts. Okay, and the size of the business is small, and the volume of business activities are also small. So they cannot afford an accountant to be maintained. So they cannot maintain. So, okay, who do not have a proper knowledge. The next, inexpensive mode of maintaining. So they cannot keep an accountant. So they maintain only those personal or transactions. They maintain only personal transactions like personal account related transactions. Whatever the credit transaction they did, that according to their convenience. So, okay, so they take very less time to record and that very few books they maintain. The next is how to calculate the profit or loss under this. Okay, generally, okay, limitations also there. You can say double entry system is not followed, and we cannot ascertain exact value of the firm, or exact profitability of the firm cannot be analyzed, and owners face a great difficulty in filing the insurance, and very difficult the income tax also to identify the actual profit of the firm. Yeah. Right? So next one is that ascertainment of profit or loss. How do we ascertain the profit or loss of these forms is important. Okay, the profit or loss of these forms is like ascertained uh, by preparation of statement of affairs and statement of profit or loss. So prepare. So here in the question, you will be given some information relating to the balance sheet items and some profit related items information. So what you are supposed to do, profit will not be there, balance sheet items. But as they don't maintain any accounts records in a systematic manner, we don't call it as a balance sheet. We call some assets and liabilities information will be provided, and based on that assets and liability information, a form will form will keep this and maintain its accounting records. Sorry. Okay. So two we will find. If we want to find the profit of the firm, first you need to prepare a statement of affairs. So two we are supposed to be preparing statement of affairs, preparing statement of profit or loss. Statement of affairs is nothing but balance sheet. Only the thing as they are not maintaining under our double entry system, we don't call it as a balance sheet. So what you do on the left hand side, that is liabilities part, you will take the bills payable, outstanding expenses, and on the asset side, you will take land, building, machinery, furniture, whatever the assets are there, all those. The difference of between the assets and liabilities is going to be your capital. It can be any sign. If it is on the asset side, means capital has been withdrawn. Okay. So this the difference between these two is your, you are supposed to find the capital. Once you get the capital like this, you will be given information relating to the assets and liabilities of a firm at the beginning of the year, close of the year. Okay, assets and liabilities of the firm at the beginning and close of the year. So based on this, at the beginning of the year, if you say whatever the capital, call it as at the beginning opening capital, and when the end of the year, if your information is given, you call it as a capital at the end of the year. Okay, so this what you do after calculating, preparing the statement of affairs, you will prepare a statement of profit or loss for the year ended. So that is uh, capital as at the end of the year. Okay, first, whatever the capital at the end of the year is there, that you will take, and to the given capital at the end of the year, drawings during the year will be added, which will be given to you in the question. And after that, if any additional capital introduced, that also to be added. And then after adding drawings and additional capital to the capital end of the year, you will subtract whatever you get is called as a adjusted capital. From this adjusted capital, you will subtract capital at the beginning of the year. Capital at the beginning of the year. This capital at the beginning of the year, by subtracting whatever you get is going to be the profit or loss of the firm. So it's a so simple sum which you can do easily. Okay, based on your information provided to you in the examination and questions. Okay, let us see one example question. Here, look at the question. Example, following information extracted from the records of sheet 2, and the information has been given directly. So you can prepare directly the calculation of profit for the year, because you have been given capital at the beginning, capital at the end, in additional capital, drawings. Okay, so first what you are supposed to take, capital at the end of the year. To the capital at the end of the year, you are supposed to add drawings. Drawings during the year, 30,000, 2 lakh 30. And then additional capital also to be added. Capital brought by the proprietor during the year, 50,000. So total 2 lakh, like subtract, subtract. So you get I'm so sorry. Additional capital has to be subtracted. Go in the reverse way. Okay, additional capital to be subtracted. So then you will get 1,80,000. So from that, capital at the beginning of the year to be subtracted, you will get the profit made during the year. Please, this is a simple question. You can expect for the 5 marks, 4 marks question. But in the 12 marks, if you have to answer, if for 10 marks question you have to answer, this is going to be. See here, you have been provided with the capital at the beginning of the year, April 1st, 2016, and he is not maintained any accounting books. So during the year, he introduced some further capital and withdraw 10,000 for personal use. And the end of the year, that is 31st March 2017, his assets liabilities are showing like this: creditors, stock, banks. You're supposed to identify these, what comes on the liability side and what comes on the asset side, because you already did your final account sums in your financial accounting one. Okay, you have to recall the information and the knowledge, or you can just remember assets, properties, which increase your value. Liabilities are nothing but debts, which decrease your value or which are supposed to be payable due to the outsiders. Okay, so here, if you see year ending capital, so we prepare statement of affairs. Statement of affairs, take the liabilities on the liability side and assets on the asset side. See, asset, liabilities, what do you have? Creditors and nothing. It's only creditors. On the other side, you have debtors, stock, cash. Three items are there. So add these three and subtract the creditors value. Whatever you get, that difference is going to be your capital. Is that clear? Did you all following? Yes, Fuse, mute your mics. Okay. So after calculating statement of affairs and getting the capital at the end of the year, you are supposed to calculate profit, the statement of profit or loss. So here you are supposed to take capital at the end of the year. To the capital at the end of the year, add drawings, subtract additional capital, then you get uh, adjusted capital. Whatever adjusted capital you get, from that subtract the opening capital, that is capital at the beginning of the year. The difference amount going to be your profit or loss. Please take the screenshot of this pro forma. If you know the pro forma and able to identify theory part notes by next class, I'll give you or I'll share with you all. Please take this pro forma. Statement of affairs. Take the statement of affairs. The next, take statement of profit or loss. Screenshot of statement of profit or loss. Then copy this question with the solution from here to here. Okay. Copy this. And next, illustration 1 also please copy. Means copy in the sense, take a screenshot and please do copy it down in your books. Illustration 1 continued with the statement of profit or loss. Then, now let's see our next question. Here, a little illustration 2. Look at the illustration 2. Mrs. Vandana runs a small printing firm. She was maintaining only some records. which she thought was sufficient to run the business. On April 1st, 2016, available information from her records indicates that she had the following assets and liabilities. 1st April 2016 means you are supposed to calculate opening capital. Okay, printing press, building, stock, cash at bank, cash in hand, due from customers, due to credit us, outstanding wages are given, and she withdrew 8,000 every month for meeting her personal expense. Every month 8,000. So 12 months into 8. Okay, 96,000 you must. And the next on March, she had also used 15,000 during the year as additional capital on March 31st, 2007. Her position was. We are supposed to prepare a statement of affairs for beginning of the year and for end of the year. So that's the reason why instead of preparing two separately, the columns, particular liabilities and assets are same. Only amounts are different. So he has taken like this. You can also do like this for the beginning of the year and for end of the year values. Beginning of the year, end of the year values. So creditors, the given information just placed in the table. Say creditors, wages outstanding, and then here printing press, buildings for 2 years, and then stock for 2 years, debtors for 2 years, cash in hand, and cash at bank for 2 years. Right? This is the one thing what they added, and the difference between these two means asset minus liability for end and beginning of the year is going to be the capital. So that's how you got a capital at the beginning of the year and capital at the end of the year, right? Once you calculate the capitals for the beginning and end of the year, you're supposed to take statement of profit or loss for the end of the year. Is capital at the end of the year. To that, add the drawing. He said 8,000 per month. So for 12 months, you must calculate and take. Then subtract the additional capital given here. She introduced additional capital of 15,000. She had also introduced 15,000 additional capital. So subtract additional capital, then whatever you get is called adjusted. From the adjusted capital, subtract the capital at the beginning of the year, then you may get profit or loss. I hope you all understood. This much is only your accounting from incomplete records. Please take the screenshot of it. Please, you can unmute yourself and can talk. Okay? Yeah. That will do. Actually, no, you cannot guess. No faculty can guess and give you the important questions. All the basic questions, meaning, objectives, features, advantages, disadvantages. These kind of questions only important. In accountancy, first chapter, in previous class, we have discussed about which one? Bills of exchange. In bills of exchange, what is bills of exchange? What are parties to bills of exchange? Characteristics and contents of bills of exchange are important. What else are there in the difference between the bills of exchange and promissory note? Difference between the bills of exchange and promissory note. These are the important questions for the chapter 1 or the block 1 for theory. The next problem, you have bills of exchange withdrawn, retained, four cases when bill retained with the owner and discounted, sent to bank for collection, endorsed. The next, dishonored. After that, mutual accommodation bills that I'll cover today now. Okay. And this second unit, the block, this block, fourth block, accounting from accounts from incomplete records. What do you have? This only two statements. If you learn and are able to identify, you can answer this question. The difference, what are the reasons for incomplete records and the meaning of the incomplete records, characteristics of the incomplete records, or features of incomplete records. These are only the important questions, theoretical aspect. But some is very simple. You can score if you have concentrate. Okay, that's incomplete records. Yeah. Right. Next. Uh, Tomorrow, yesterday's class, previous class, bills of exchange. I think accommodation bills are there. That also I'll cover. You may expect a question on accommodation bills. Just give me a time, 2 minutes. What else you want? Important questions, ma? This much only in problem paper you will have equally, especially these topics more than the theory. Problems only are there. The theory, whatever the brief introduction I am giving, that itself only the theory part. I hope you all got. Is it right? In the first unit, that is first block, bills of exchange, you have in what the meaning of a bill of exchange, features of bill of exchange, features or characteristics, or essentials of one and the same characteristics, features, essentials of a bill of exchange, one and the same. The difference between the promissory note and bill of exchange, parties to bill of exchange. Okay. And the next accommodation bill. Let's do sums on accommodation bill. I'll show you. After honor and dishonor, accommodation bill and renewal of bill also I explained you. Renewal of bill when interest is charged. Accommodation bill. This is Anything else? Yeah, I'll share Byju's notes here. Yeah, please see. Journal entries for accommodation bill. Only drawer. If the accommodation is for only drawer, but for you, accommodation will be given for both. It's not only drawer. In drawer and drawer books only questions will be there. See, look at the question. Uh, C is the drawer. Bank account, discount account at bills receivable because only drawer is taking the same amount only, but the honor on the date honor this drawer in case of drawer is accommodation of the drawer only. First, bill received sold entry will not be there. Bill receivable entry will be there. Discounting entry will be there, and cash received means this cash will be sent by the drawer to the drawee. That will be there because drawee is the one who has to make payment at the bank counter. Okay. So, but the actual amount taken by the drawer. So this entry will be extra for you. C account data to cash account is the extra entry which you get in case of accommodation bill only for the drawer. Next, accommodation of bill only, sorry, for both drawer and drawee, in case of both drawer and drawee. Then first entry for bill drawn will be there in both the books and bill accepted will be there in the C's book also. Okay, in the drawee's book. The next entry, bank discount entry, bank account data, discount account data, visible account. Okay. Here, no entry. After discounting, B will transfer the amount to drawer. That is, drawer will transfer some amount, 50% of the amount to drawer, drawee, and on the due date, whatever the amount that will be taken. See, if you work out this problem, you will know. Please take the screenshot, you will understand. Okay. Now, unmute your mic and switch on, told me. I'm saying in mutual accommodation bills, A becomes the drawer and B becomes the drawee. But okay, upon each other, upon A and B, both of them write two bills. A write one bill, B write one bill. A bill, B accepts, B bill, A accepts. Like that, two bills they'll have both of them exchange and accommodate, because here credit transaction is not taking place, but in order to fulfill their financial needs, they enter into a bills of exchange transaction by writing bills upon each other, and these bills they what you call, they discount in the bank and take the advance and fulfill their financial needs. On due date, again the bill amount will be paid by them as the drawees. So in the one book, in the drawer, A becomes drawer as well as drawee, B becomes drawer as well as drawee. That is what here you are supposed to understand. A for one transaction drawer and B is the drawee and the mutual accommodation bills. At the same time, for the second bill again, B becomes the drawer and A becomes the drawee. That's how the thing goes on. Okay. Yeah. Anything else?